Hey everybody, happy Memorial Day weekend. Hey, so I thought we'd have some fun this weekend. I wanted to take the opportunity to answer some of the biggest questions that I get the most, either about tax planning or accounting or what have you. So the first one I'm going to do is this is the biggest tax planning blunder that people make. And if you have an S Corp, you want to pay close attention here because this one's really for you. So, the biggest tax planning blunder that I see CPAs make with their clients and subsequently you is setting up an S Corp for them to run their income through without being compliant. Now, how is it non compliant? When you have an S Corp, the IRS requires you to take a reasonable compensation, and this is even if you have multiple entities. So if you have more than one entity, if you have like 3 LLCs and all of them are S Corps, then you're required to take a reasonable comp from all of them. And the biggest blunder I see is one of two things with this. Either one, they take no reasonable comp, which immediate audit flag. And, rumor around town is the IRS is going to get a lot more stringent about this. If someone looks at your tax return and they see you filed a 1040 personal one and 1120S for your S Corp, and on your 1040, you've got a K1 from the S Corp, but no W-2, company mascot hanging out here, but no W-2 on your 1040, then that's an instant red flag. They automatically know, okay, this person has an S Corp, but they're not taking a reasonable salary, or they'd have a W-2. So that's one way of doing it. Now, the other big way they blunder it is someone will set up an S Corp and just take everything through salary. Now, this isn't going to get you in trouble so much as it just ends up costing you tax dollars. The whole point of having the S Corp is to save money, and if you're running all of your income to yourself personally through your salary and not taking a distribution, then you're not saving any tax money. So, in the first scenario, you're effectively operating an illegal business, at least from a tax perspective. In the second scenario, you're technically compliant because you're taking a salary, but you're not saving any money. So, the way you do this the right way is you have to get with someone, such as myself, who is, a tax planner, who knows your industry, who knows how to set things up for your specific industry and your specific situation to get you a reasonable comp number that is high enough to be IRS compliant, but low enough that you save a significant amount of money every year. So if you have an S Corp and you're watching this and you're not taking a salary, then I highly recommend, I'm going to put a link to my scheduler below this video. I'm going to put it below every video, but I'm going to put one below this video. If you want to know more about this, if you are trying to set up an S Corp, you don't know how, or if you have an S Corp that happens to be illegal or happens to not be saving you money, click the link below. I'm going to do a few more of these videos throughout the weekend, so stay tuned. This is the first one I'm doing, so I'm going to send this one out via email, via social media, and maybe a little while later today I'll do another one. See you guys soon.